Okay, good morning, everyone. The guys online, can you just let me know if you can hear me? Upper lady, can you hear the sound? Can you just give me a thumbs up if it's okay? Okay, great. Okay, so today we're doing some revision for your preparation for your exam. So what we're going to do is we're going to first look at the 2019 exam and work through the paper, and then at the end I'm going to do revision, just the main things which I think you guys need to remember and just look out for. Okay, so they can ask you anything from Learning Unit 1 up to Learning Unit 9. They would most probably focus on the learning units we haven't written on, which would have been, let's quickly check, which would have been learning units 7, 8, and 9. And then they generally do 6 and 2 as well. But remember, for learning unit 9, they can potentially ask some of the other learning units as well. But we're going to look at all of them just to make sure that we cover all the content. The guys that are online, if you have questions, just type it in the chat function and I'll answer it as we go along. And then the guys in class, just ask your question, and then I'm just going to repeat it for the students online before we start. Okay, so let's look at the first question. And you can just get a question and the workbook here on the front. Okay, so the first question in the exam, if we go to the you are required portion of it. So let's quickly scroll down. So in the required, they tell you use the transactions above to complete the following journals only. So you'll see they've only asked for specific types of journals. And they say where document numbers are not supplied, you must supply appropriate document numbers. Okay, so if they give you a document number, then just include that document number in the journal as well. And let's quickly see which journals they've specifically asked for. The first one is your data's journals. Now remember, with data's journals, we are looking for credit sales. Okay, so if you see data's journal, it needs to be any credit sales relating to that. We'll go into that one. Then the next one is your data's allowance. Now that would be any returns of items that was in your DJ. So in your data's journal, any credit sales that I return will then be captured in my data's allowance. And then the cash book receipts is any monies received. Okay, and then they tell you the general journal. Now this is everything that doesn't belong in the other journals. Now you will see that is like 10 marks already, which means there is a few journals that would have to be captured. Now what is important to note, in this questions, narrations are not required. So you don't have to actually do the narrations for the general journal as we normally do. Okay, and then let me just move this block quickly up here. The last thing is total only the necessary columns and post to the following general ledger accounts. So you only total certain columns. Now let's look at what general ledger accounts we have to do, because that will guide what columns you have to sum up. So the first one is the sales account. So that means any sales columns will have to be total, and the debtors control account. So the totals we need is sales and debtors control. Okay, so that means we don't have to total any of the other columns in this question. And then also important to note, oh, sorry, not that one, round to the nearest rand. So if they indicate round to the nearest rand, you round up to the nearest rand. If they don't, then you need to show me the cents as well. Okay, So that is the information that we require. So let's go through the information to see what information will go where. Okay, now if you read there, they tell you Jabulani Jomo, a sole trader, owns Jomo Enterprises. The entity is a general dealer which uses the perpetual inventory system. Okay, so the first thing you have to see, perpetual inventory system. So where do we take our information if we've got a perpetual inventory system? What is the key thing you have to remember? What account do we take it to? Okay, yes, we've got a cost of sales. So I'm just going to say COS. So cost of sales column would be included in your DJ and your cash book receipts. Okay, but another thing is if we've got general journals, it would go to your asset account, which is your inventory account. So perpetual asset account, whereas periodic is an expense account. Then they tell you we're not a registered VAT vendor. So that means we do not have to take VAT into account when doing this calculation. So they made it a bit easier. So that means your debtors control in your sales column should be the same. Okay, and then markups are on their goods at a constant markup of 15% on cost. Now, if it's on cost, that means our cost price is what percentage? Okay, so the profit is 15%. Cost price is what percentage? Okay, no. So because it's on cost, cost would be 100. Let me just see what the guys on the chat function said. 100, yes. Okay, so if it is on cost, your cost is always 100%. If it's on sales, the sales would be 100. Okay, so if you miss that, your cost of sales amount, the calculation would be incorrect, but you would still get a method mark if you did the calculation. Okay, so that's just from the top paragraph, this is what you had to see. Then they give you the ledger account balances. So they tell you the bank is favorable, debtors control. So the debtors control amount I require for my general ledger amount. So this is the OB is the opening balance for the debtors control GL, which we need to do. So you would have to capture that in that account. And then they give you a debtors list consisting of the 3 debtors as well as credit losses. So that information you would potentially need, depending on the additional information, when we do the general journals to write off any bad debts or stuff like that. Okay, then they give you the sales amount. And this is also your opening balance for sales. I'm just going to change this. So this is a sales account. Okay, so you see from the information that you've given, if you've already read the you are required to, you can already plot out what information you need to capture it. Now let's see the transactions. Yes. Okay, so the question, just for the guys online, the question was cost is always 100. It's only 100 if the markup percentage is on cost. If the markup percentage is on sales, then the sales amount would represent 100. Okay, so that's what you need to remember. If you see cost, cost is 100. If you see sales, sales is 100, and then you work out the cost price backwards by deducting the profit. Okay, is that fine? Okay, if we look at the transactions, the first one we had a receipt was issued to Kleho for we paid 55,000 Rand. So he paid 50 in full settlement of the amount owed on the 1st of April. Okay, so here they tell you he owed an amount of 58,000. Now, if we pay less than what we owe, what would we do with that 3,000? How do we get it out of Katlego's account? Okay, so what two journals would be affected by this transaction? Okay, CBR, which is cash book receipts. Okay. Okay, so the cash book receipts, we accounting for the 55,000. But now there's 3,000 that I still need to write off. Okay, no, they already owe us 58,000. But how do I get that 3,000 out? Because we said debtors journal is for credit sales. DAJ is your returns of any credit sales. So if it doesn't fall into those two and it doesn't fall in your cash book receipts, what is the last one? The general journal. So Mapaledi, that's correct. So the general journal is where the 3,000 would go. The 3,000 would go to our general journal. Okay, so that is the settlement that we need to capture. Okay, so anything that doesn't belong in the other journals always go to your general journal. Then if we look at cash sales, now this is cash sales. If it's cash, it goes to your cash book receipts, and it's the cash creditor roll of 424,000. So this goes to cash book receipts. Okay, and then the tenant paid her rent directly into the current bank account for 17,000. So this is also a cash book receipt. So all that means is it went straight into our bank account. So when we do our bank recon at the end of the month, we would have captured it into our cash book receipts journal. Then Need Bank returned Katlego's check on the 1st of May and marked it RD. So if he returns it, what do we need to do now? What journals would be affected? Okay, no, not debtors allowance. Debtors allowance is when I return goods sold. Okay, let's see what's online. Okay, so they say the cash book receipts. Okay, now normally if you've got a RD check, it doesn't go through cash book receipts, it would go through cash book payments. Now they haven't asked for the cash book payments, but what we have to reverse is we would have to reverse the general journal for the discount. Okay, and then the RD check would generally go through our cash book payments. Okay, so general journal and cash book payments. That's where you mark RD checks. Then on the 8th, we sold on credit. So if we sell on credit, this is where our general journal comes in. So goods are on credit to Nancy Jones for 37,490. They give you the cost price as well. Now, why do they give you the cost price for the goods that were sold? What do you have to do with that information? Okay, so normally they won't give you the cost price. You would have to go work it out for your column, for your cost of sales column. Okay, but we'll work it out anyway to just make sure that your cost of sales is normally your cost price if they are the same. Okay, so this would go to your general journal. Then we sold goods on credits to Brandon for 25,000. Also on credit, 25, and the cost was that. So this is also your DJ. Then Nancy returned inventory. Now we said when someone returns inventory, this would go to your DHA. Okay, and they tell you the inventory was damaged and a credit note was issued. Okay, and then on the 11th, Brendan requested a 3.5% rebate on his purchase dated the 8th as he was not entirely satisfied. Now, if you give a rebate because of the goods were of an inferior product, that also goes to your DHA. So it's for returns as well as any rebates that we receive. And then the last one is we took merchandise. I don't want to make a comment. So he took merchandise with a selling price of $3,565 for his own use. Now, drawings. We take out of our general journal, but at what value do we need to take out this amount? Okay, so the answer that the class is given is the value is the cost price. So this is where your markup percentage will be important. Okay. Let's see if there's any more transactions. So there's one more transaction. They tell you we received a letter from Nancy Jones' attorney that stated she is insolvent. And we received a check of $25,000 in payment and the rest is written off. Okay, so how we account for this is we account for the $25,000 as a cash book receipt. And then the rest will go to your general journal. And this is where the opening balance of the data is important. Okay, to work out how much she still owes. Now let's take this information and then we go capture it in the I've made an Excel file similar to what you have the workbook template. Okay, so let's work through the transactions and see how we would have captured each one. So if we start with the first one is the receipt. We would have captured it in the cash book receipts journal. So let me just make this a little smaller so everyone can see it. Okay, so the first entry would have gone to the cash book receipts journal. Now because they've given you the document number, you need to include the document number in the first column. Then you include the day. Then you give your debtors details for the information. We've received $55,000 and that amount goes against our debtors control column because they are settling their account. Now because we're just settling account, we do not worry about the cost of sales in that specific entry. Then if we go to transaction number 2, okay, no, so there was a 3,000 Rand, which was also included in there, which we need to write off as a discount settlement. So that goes to our general journal. You would capture that transaction at the same time. So you would debit the sales. Because of the fact that we're giving them a discount, we are reducing the sales amount. And then debtors control with the 3,000 and it's a settlement discount granted. Okay, you do not have to give that description at the bottom as per the instructions, but I've just included it in here for your reference. Do I need to make it a little bit bigger for you guys? Okay, so let's just make it slightly bigger. Is that better? Okay, I'm just gonna scroll up so you can see. Okay, so that is the first transaction. It had 2 components, the actual receipt and the settlement discount. Then if we go to the 3rd of May, we had a cash sale. Now we say if it's cash sales, it goes to your cash book receipts. It does not go to your debtors journal. And the cash register roll is 424,000. Now remember, in your cash book receipts, we have a analysis of receipt column. We've got a bank column. Depending on how the amount is paid, you have to reflect it in both of those columns or either one of them. So if we go back to the cash book receipts, okay, they didn't give you the analysis of receipt column. They only gave you the bank column in this instance. So you did not have to worry about it. But if they give you both, for both of these transactions, it would have been in the cash book receipts as well as the bank column. The only time it goes only in the bank and not in the analysis of receipt column is if your debtor deposits the money directly into your bank account. Okay, so it didn't actually go through your account. Now, because of the fact that it's cash, you can say cash sales or cash sales, and then you enter the amount under the bank column and then the sales column. But we also need to include the cost of sales amount here. Now, the cost of sales is, we said the cost is 100 and the markup is 15% on that. So if we just go back to our first page, which makes our sales price 150. Now, to convert the sales amount to a cost of sales amount, we multiply this by 100. So we take the 424,925, we multiply it by 100 because I want to work out the cost, and I divide it by the sales percentage, and then I get to a cost of sales amount of 369 Rand and 500 Rand. Okay, so in this instance, they didn't give you the cost of sales, so you need to physically go calculate it. Then they tell you, Susie Snyman paid rent directly into our bank account. So in this instance, if they gave you the analysis of receipt, you would have only shown the 17,000 in the bank account. Okay, so let's quickly show what this would look like. So if we unhide the information here, why is it not showing? Yes. Okay, do you want me to go a bit slow? Okay, where did I lose you? At the cost of sales. Do you want me to repeat it? Okay, so let's quickly go back. Cost of sales. We take the sales value here. Just going to highlight it for you. Let's make it blue. Okay, so you see the 424,000 under the sales column. Now for cost of sales, you need to go look at how's the markup calculated. Now if I go back to the question, when we read the information, we said all goods are marked up are 15% on cost. So I take the initial cost value, I add 15% to get to my sales amount. Okay. Now they have given you the sales value, but I still need to work out the cost of sales. So now I have to reverse that 15% that I've initially added on. Now to reverse that transaction, I multiply it with 100. So I want to work out the cost amount, which represents the 100. Okay. And then I divide it by the 115, which represents the sales value, to get to the cost of sales value. Okay. So that's how we got to that. Is that okay? Okay, then the next transaction we said is Susie's rental expense or rental income. So that is just captured under bank. Now, because rental income does not fall under your bank or your sales column, that is where you go capture it under the sundries accounts. And your details there is your account name. So in this case, you need to indicate it's rent income. Don't just write rent. The reason for that is there's also a rent expense account in accounting. So if I don't know whether you're referring to rent income or rent expense, you won't get the mark. Okay, so that's just important to note to tell me whether it's an income or an expense account. And then you document the number, which is exactly what we've received, which is the 17,000. Do I need to move? Okay, let me just sit here. I'll move the computer. Okay, can all of you see now? Okay, no, that's fine. Just tell me to move. I haven't done this and live at the same time. So it's a bit of a a challenge this morning. Okay, so let's move on then to the next transaction. So now we've already captured the rental income we've received. Now on the 5th, we said that Katlehor's check was returned. Okay, now when we return the check, it generally goes to your cash book payments. Now they haven't asked for your cash book payments, but they did ask for your general journal transactions. So what that means is I need to go back to my general journal here at the bottom, and I have to go reverse this initial transaction that I've captured. I need to reverse now. Okay. So what I do is I do exactly the opposite than what I did initially when I granted the discount. I now go reverse that transaction to reflect that that amount is still outstanding. But because they did not ask for your cash book payments journal, I do not actually capture the RD check at this stage. Okay. If you didn't know it goes to the cash book payments, some people would have potentially put it under the cash book receipts. Now, in this module, we don't give you negative marks. So even if you've included it in there, you wouldn't have lost any marks. But if they asked for the correct journal, you would have lost the marks there. Okay. Are you guys okay? Can I go on? I will also load this Excel file for you on VC Learn. Okay, but you can make comments as we go. Then on the 8th, we said we sold goods on credit. Now, when I sell something on credit, it goes to my debtors journal. Okay, now they've given you the sales price as well as the cost of sales value, or the cost price. So if I go up to my debtors journal, I will go capture that account information. So I go capture the document number. On the 8th, Nancy Jones. The debtors control and the sales value in this instance is the same because of the fact that we're not registered for VAT. So we do not have to take VAT into consideration. Okay, if they do ask you VAT in the question, the sales value will always be less than your debtors control because you will take out a VAT component. Okay, but in this instance, it's exactly the same. And then they've given you the cost of sales, so you just go capture the cost of sales value in your journal. You don't have to go work out this one. Then if we go to the 8th as well, we also sold goods on credit to Brandon for $25,599 and the cost price was $22,260. So we also then capture that in our debtors journal. Okay, so exactly the same principle as the previous one. You have your debtors control, you've got your sales and your cost of sales. Then if we move on to the 10th. Now Nancy Jones returned some of, yes. What, to the Excel file? Okay, what do you want to, the 25,590 and 909? What amounts are you looking at? 260. Which amount? This one. Okay, so that's 25,599 and they're both exactly the same because we don't take VAT into consideration because our vendor is not VAT registered. Okay, so if we're not registered for VAT, we do not raise output VAT, we cannot claim input VAT. So the sales and the debtors amount would always be the same. Okay, is that what you were asking? Okay, can I continue? Now on the 10th, Nancy returned some of the goods that she purchased on the 8th. Now they tell you what the value is. So they returned inventory of 7,500 And then the cost price they provided is 6,522. So what you do then is in your debtors allowance, we then go capture that information. So we capture the 10th, we say it's Nancy Jones. Debtors control would be the 7,500. Now in our debtors allowance, note that the account name here at the top is sales returns and not sales. Okay? We do combine the two accounts at year end when we close off our books, but before that it's separate accounts. Because the ones are debit and the ones are credit. So what I want to do is I want to show how much was my actual sales and how much of the sales that I made got returned because of rebates or bad products. So it's more, we split it apart so that you can see if I want to see how my products are doing. I can see, okay, this product, 50% is getting returned. Then I know there's something wrong with that product line and I can go adjust it or I scrap the product line altogether. So it's more from an analysis point of view. It's easier to do the analysis to see if there's anything wrong with that product or if people are experiencing issues with my product and returning it. Okay, so that's why we split it. But then when you work out the profit or you do the disclosure, you combine the two accounts to just reflect the net sales. Okay, so that's why there's different account names. That's the rationale behind it. Okay, but normally, and it says they will give you these columns with the headings to just capture the information. Okay, but that's the reason behind it. Okay, then if we go to the 11th, now Brandon also asked for a 3.5% rebate on the purchase, because he was not entirely satisfied with the purchase. Now, if I'm asking for a rebate, did I actually return any goods? No, I haven't returned goods. So in this one, no goods were returned. So that means there's no cost of sales that needs to be captured. Okay, so this is very important to remember when you do the DAJ for this one. Because of the fact that we're only asking for a rebate, which is the 3.5% of the 25,599. That is why cost of sales, there's nothing in here. This is blank. I'm just going to highlight here. Okay, it's because we asked for a rebate and no goods were returned. Let me just make that text black so that everyone can see it. Okay, so that is why it's 0. In this instance, you would actually receive a mark for including nothing there, because we want to see if you actually know that it doesn't have any cost of sales, that type of transaction. Okay, and they normally give a full mark for that because it's a basic principle we're testing. Is everyone fine with that explanation? Okay, then on the 18th, we tell you Jabulani Jumo took merchandise with a selling price of 3,565. Okay, I see there's a comment on the chat function. Okay, Mapaledi, do you want me to just repeat the cost of sales column information? Okay, so let me quickly repeat that again. Okay, so in our debtors allowance journal, if we asked for a rebate because we weren't happy with the quality of the goods. We're not physically returning any goods. So for that reason, your cost of sales column would not have an amount. It would be a 0. And you would actually receive a mark in an exam or in a test for indicating it's a 0 and there is no cost of sales. Okay, so that's what I meant. Mapaledi, are you fine with that explanation? Okay, so if we look at the 18th, now we say the owner took merchandise for his own purposes. Now what we said is if I take inventory out of my business, but it's for my own personal use, I will take it out at the cost price. I will not take it out at the selling price. So they've given you the selling price information. So I need to convert that selling price to a cost price using the markup percentage that was given in the beginning of the question. Now, because of the fact that this does not fall under your debtors journal, your debtors allowance journal, or cash book receipts, this will be captured under your general journal. This is where you bring it in. Now, in the beginning, we also said we're doing a perpetual inventory system, and this is where it becomes important to know which one it is, because you will either take it to the inventory, the asset account, or the expense account, which is your purchases. Now, because we're doing perpetual, we're taking it to the asset account, the inventory account. So if we do the journal now, let's scroll down. Okay, so if you do the journal, you would then debit the drawings account. So that is where the owner takes out amounts out of the business. But we said at cost price. So how do I convert the sales price to a cost price? I take the 3,565. I multiply it with the 100, which is the cost that I want. And I divide it by the 115, which represents the sales value. And then I get to a cost value of 3,100 Rand. And then we said it is perpetual. So we take it to the inventory account. So we're reducing the inventory because we are physically taking it out. And I credit that with the same cost amount of 3,100. Okay, so this, they will always ask you some form of drawings to test if you understand this principle. And then we can also test if you understand the inventory system to know which account it's supposed to go to. Okay, so it's important that you know what inventory accounts are you busy with and how to do the markup percentages. Okay, do we have questions on this or can I go on? Are you okay for now? Okay, then if we go to number 27. So number 27 tells me my debtor is insolvent. Now you remember when we looked right at the beginning of the question, I'm just going to scroll back so you can see. They've given us a debtors list with each and every debtor's opening balance. Now I told you what this might mean is that we will need to take some of this information later on. Now, because Nancy went insolvent, this information here would be relevant in doing the calculation. So I would know what her opening balance is, and then I would have to adjust for the information based on what happened during the month to work out what is the outstanding value. Okay, now let's start first with capturing the amount she's paid, and then we'll work out how much do we need to write off. So the first thing, do the easy transaction, which is the payment. So we capture the payment amount. I'm just going to scroll up so you can see the headers. So we first capture the payment amount. So we know that Nancy, insolvent estate, paid 25,000 to our business. Okay, so that's step number one. Go capture the payment. Because you get almost 2 to 3 marks for a transaction like this. So you don't want to start with the difficult stuff first and lose the easy marks. So start with the things that is easy first and then go do the more complex stuff if you're struggling with some of this. Okay, now how do we actually work out how much money do we now have to write off? What do you think is the approach you will have to follow? What is our starting point when we work out how much a debtor owes us at a point in time? Okay, so the class said we start with the opening balance. That's correct. What else do we need to look for during the month to adjust that opening balance with? Okay, I'm going to scroll up and then you guys can take that information to see, is there anything that you can see on the screen that might potentially affect Nancy's balance? So what has Nancy done during the month? Okay, she's bought stuff on credit, okay, which comes from your debtors journal. So that would have increased her balance. But she's also returned some goods, which is in your debtors allowance journal. So that would also affect the balance by reducing it. And then the last thing is she's also made a payment now of 25,000, which I also need to take into account. So if we do the general journal, I'm just going to unhide it. In this calculation. Then deduct anything that was returned during the month, which was the 7,500. And then the last step is to account for any portion that they've paid, which is the 25. And then the remaining balance, in this case, is 59,990, is then written off to your credit losses account. Okay, so credit losses is the same as bad debts. Now, because they've given you the accounts at the top, you know the account name is credit losses. If they don't give you the account names, I would mark correct credit losses or bad debts if you take those two accounts. Okay. So this is how you work out how much is outstanding that will be written off as bad debts. Okay, does that make sense? Do you understand how to get to a closing balance to work out how much you're going to write off? Yes, no? Okay, so that was up to 1.4. Are you finished? Can I continue? Okay, so we've done now the journals. Now let's see, what do we have to do now? So now they tell you to total only the necessary columns for the following general ledgers. So now we know we're going to do the sales account and the debtors control account. So now I go back to my ledgers and I only go total those columns. So I need to total the debtors control and the sales column for your debtors journal, as well as your debtors allowance journal. I'm just going to total all of them, but you only had to do those specific journals. So I'm just going to highlight the ones you had to total for the question. Then if we go to the cash book receipts, we would only total the sales and the debtors control column, but I'm just going to show you what, if they ask for everything, what you would have totaled. Okay, so only those ones that are shown in orange would have been totaled. Now remember, your general journal do not have totals. There we will take the individual accounts to your general ledger account as opposed to a total balance with the other journals. Okay, now let's go capture this in our general ledger accounts. So we said the first thing we do is we capture the opening balances which were given to us in the question. So the opening balances were right here in the beginning. We said debtors control was 312,000. Now debtors control, which side would the opening balance be? On what side is debtors balance? On the debit side. So our opening balance for debtors would be on the openings on the debit side. So you write there the 1st of May, the balance brought down, and you capture the 312,000 that was provided in the question. Okay, now sales amount, what side is sales, opening balance, or totals that you bring forward? Sales is what type of account? It's owner's equity. Which part of owner's equity? It's a credit, but it forms part of your income accounts. So income is always a credit, so it increases your owner's equity. So we capture the same thing, 1st of May, the balance brought down, and we show the 457,500. Now we have to take the information from the journals that you've completed and capture it in these accounts. Now let's say in an exam, you made a mistake in the journals at the top. We actually mark, so you get a mark for the account name. Okay, so providing the correct account name and folio number, you get a mark for that. If your amount is incorrect, we go back to your journals and you get a method mark if you transferred your total into these accounts. Okay, so you can still get full marks for this even though you made a mistake somewhere else. So we don't penalize you for making a mistake twice. Okay, so let's start with the data's journal. So we know data's journal, if we've got data's control, so our sales increased, this would be debit your data's control and we would credit your sales account. Okay, so we're increasing your data's balance and we're increasing the amount of sales. Now knowing that information, I know the data's control out of the data's journal is 63,000. So if I scroll down to my data's control, we know we're debiting that amount. Let me just see what account is this. Okay, so this is the 63,000 that was at the top. And you see we say DJ, which is your data's journal, and we account for that amount. This would normally be on the 31st. Now in your sales account, we said we made sales for that same value, but that goes to our data's journal, or data's control is the contra account, also on the 31st year. Just put the 31st there on the left. It's also DJ and it's also 63,000. So I'm just going to change the colors here at the top. Okay, so there's the 63,000 from our data's journal, and we've captured it in our data's control as well as our sales account. Yes, you are supposed to be seeing the spreadsheet. Are you not seeing a spreadsheet? Okay, let me quickly stop sharing. Just gonna stop sharing the screen and then I'm gonna reshare the Excel. Okay, do you guys see the Excel now? Okay. So for the guys online, just then use your PDF question just next to you, and the guys in class just the print out, so that I then don't flip between the screens to make sure you guys can see the Excel file. Okay, so we've done the data's journal now. So we've done step 1. Now if we look at the data's allowance journal, we said the one account is data's control, the other one is sales returns. So we do not account for the sales returns in the sales account. So that column you leave out. I'm just going to change this color just so that when we do the general ledger account, you can see where the balance is coming from. So we're only going to take the debtors control column from our debtors allowances and go capture it in your debtors journal. Debtors control general ledger. Now, if I return goods, will it increase or decrease my debtors control account? Okay, so it decreases our debtors control account. Okay, now let's quickly see what value it is. The value I need to capture is the 8,396. Okay, so there we capture the sales returns. Then if I take the next one, we look at the cash book receipts. Now the cash book receipts is any payments we've received based on sales. Now here we document any cash sales we have. Okay, so debtors controls is payments we receive from our debtors, and sales here is any cash sales. Okay, so if I take the cash sales, I will go capture that in the sales account. Now we're increasing our sales. And we capture the sales amount of 424,000, which comes out of our cash book receipts. Okay, now because it's cash, that will not be captured in your debtors control. It's only going to your sales account. So normally how this would be is we would debit bank, we would credit the sales account, we would credit debtors control, and then we would credit all the other accounts as well. Now debtors control, we received 80,000 from our debtors so far, so we need to reduce our debtors control account with that 80,000 that we've received. Which we then capture on the credit side because we are reducing our balance. Okay, so this is just now those journals. Now we have to go look at, now we have to go look at the general journal. Now you'll see there's 4 transactions in the general journal. So how do I know which ones I need to capture? I go look for anything with a sales and debtors control account to capture in these general ledger accounts. So if I start with the first one, I had settlement discounts, so I reduced the sales and I reduced our debtors control. So what happens on the first? Oh, this one's the 5th, sorry. Wrong side. Okay, so on the first, I reduce my balance with 3,000 Rand. But then on the 5th, I went and I reversed it as well, the same transaction, so I document it again. So that is the sales amount captured in the sales account. Then we also did the same with debtors journal. So the first one, we credit debtors journal with the 3,000 Rand there. And then we reverse that same transaction on the 5th. So now I'm debiting the debtors control general ledger with that same amount to do the contra. But now I also have credit losses that I still need to account for. Now this was on the 27th. So we account for the credit losses on your credit side for that amount. Now in a test, as long as you write down the account names, you can do the don't worry about the fact if it's not in number order, that's fine. I will mark it. So you can capture it as you go from the top to the bottom, even though it's not a number order, as long as you capture the information that is relevant. Okay, then I will still mark it even though you have the 31st first and then the 1st or the 2nd after that. Now, one thing we need to see is, do they ask us to balance that account, yes or no? So if you look at the question, they tell you the sales account, you do not have to balance the sales account, but you have to balance the debtors control account. Now, if they tell you to balance an account, that means that amounts will be assigned to the balancing as well. So normally it's about 2 marks for closing it off on the one side and transferring the balance over to the other side. Now what you have to do, okay, now another thing that I've included in here that we have not captured in any of the journals. You remember that Katlejo's check was, there was a RD check of 55,000. Now you also have to go show that RD check in here because it is included in the information. Okay, but we haven't physically done the cash book payment amount. But if you now have to go balance that account, if you don't include this, your balance will be incorrect. Okay, so this is where the 55,000 now gets captured. That was in the question, but we didn't do the physical journal for it. Now what I do when I balance it, I look at the left-hand side, I look at the right-hand side to see which one is bigger. Now based on the amount here, you can see the left-hand side will be bigger than the right-hand side. You go sum that amount, you get 433,000. Then you transfer that amount to the right-hand side. So your debit and your credit should be the same. Now to balance it, I take the debit side, the credit side, I add all of those amounts together and subtract it from my total to get the balance that needs to be carried down of 281. And then the last step that you have to do is you have to create the opening balance on the 1st of June, which agrees to that closing balance. And you get a mark for doing that step as well. Okay, so just closing off the account, you generally get about 3 to 4 marks for that principle alone. And it's not a difficult thing. And even if you make a mistake, we method mark those totals. Okay, so this is question 1. Do you guys have any questions on question 1? Do you have any questions on question 1? The ladies online, do you have any questions?